Alright everybody, we got big news from the trading world as the Nasdaq stock exchange is gearing up to switch to 24/5 trading, allowing investors to trade stocks all around the clock 5 days a week. So without further ado, let's get started. Alright, so what you can see on screen right now is a headline that I came across the other day. So the Nasdaq stock exchange is going to offer 24-hour trading 5 days a week, which caught me by surprise, quite frankly. Although, on the other hand, not really. I'm not sure if you are aware of it, but the New York Stock Exchange also announced that they are planning to switch to a 22-hour trading window relatively soon too. So I guess it's also, in a way, I guess the duty of the management team of the Nasdaq company to stay competitive when it comes to stock exchanges in the United States. And what you can see here is basically a statement made by the Nasdaq president, Tal Cohen, and I'm just going to read it to you and then I'm going to highlight a few things here. So he wrote, "From the open outcry trading pits of the past to today's real-time globally interconnected electronic markets, investors and industry participants have greatly benefited from the modernization of markets." No doubt about that. Completely agree here. That's why Nasdaq will enable 24-hour trading on the Nasdaq stock market, pending regulatory approval and alignment with the critical industry infrastructure providers. We anticipate our timeline being in the second half of 2026, so that's important to note as well. The global growth of investor demand for US equities means we stand at another pivotal moment for our markets to broaden investor access and expand wealth building opportunities and redefine markets function. While the promise of round-the-clock trading can make our markets more accessible, it also demands careful and deliberate planning. Liquidity, transparency, and integrity remain the lifeblood of vibrant markets, and any structural change must uphold these principles. So you get the idea here. They're going to move to 24-hour trading 5 days a week in late 2026. Let's see if they can stick to that schedule, but not too far, not in the not too distant future. Well, we will be able to access US equities much more frequently. So the question I wanted to discuss in this video is this a good thing or a bad thing? And maybe before I share my perspective here, I wanted to hear what you think. So please take a moment, pause the video, head to the comment section below the video and share what you think. Do you think it's a net positive or a net negative for investors all around the world? So if I were to answer that question, I would say it really depends on the perspective that you take. I think for quite a few of participants and players involved in the investing industry, the investing world, it's going to be a net positive. So a few things that came to my mind, for example, as my regular viewers will know, for example, I'm a shareholder in Interactive Brokers. And for the big trading companies, obviously, the brokerage companies, obviously, this is going to be a net positive because overall it's going to increase trading volume, leading to higher commission income for these businesses. So that's one example, for example, for one participant in the industry that is going to benefit. Then what else? Obviously, I think it's good for Nasdaq, the company that provides the stock exchange for many of the most dominant, most well-known tech companies in the world. They want to stay competitive, and in fact, they might even gain a competitive edge from making that transition earlier than maybe some of their competitors. Then I think it might also be it may be beneficial to larger institutional investors because they obviously need liquidity to build and exit positions. It's not like when they want to initiate a position, so now we're talking about the really big players, it's not like you and I who just log into our brokerage account, we type in how many shares we want to buy or sell, we click buy or sell, and then the transaction is pretty much done within seconds. No, that's not how it works for them. Take Warren Buffett, for example, who's not an institutional investor in the typical sense, but I'm using here as an example because many of you will be familiar with him, and he's obviously also managing massive amounts of money. So if he wants to exit a position or wants to build a position, this can take months. And obviously, if the trading volume increases, it makes it easier for these super large institutional investors to, as I already said, build and exit positions, meaning they can just do it faster with less friction and I guess also lower risk as well, because there's also the risk that you want to build a position, you start building it over, 2 weeks, the price shoots up for whatever reason, and you weren't able to actually build the position in the size that you were aiming for. Okay, then what else? One last beneficiary, I guess, would be global investors. So depending on where you live, and due to time zone differences, the trading window may be quite limited for you. So maybe the US stock market opens at, I don't know, say 3 a.m. where you live, then it closes a few hours later, and you don't have access to the entire trading window. So obviously this is a group of investors that are going to welcome that change as well. There is the argument, or one could make the argument, that's what the Nasdaq itself, I think, actually write. They write that continuous trading will also lead to more efficient markets. I'm not sure if that's really the case. Are equities going to be more efficiently priced just because there are, well, more opportunities to trade them? I don't know. Like, my perspective here would be that I honestly believe that most stocks are efficiently priced most of the time. However, there are smaller time windows, usually when emotions enter the room, so to speak, where stocks can be quite massively mispriced, leading to opportunities for the intelligent investors. This doesn't mean that this has to be just a 1 hour window. Take the stock of Meta platforms, for example, again, which was undergoing a 70% drawdown over multiple months. But at moments in time, individual securities can be massively mispriced. And I don't think extending the trading hours is going to change that at all. And maybe one last aspect to highlight here is, so what you sometimes see is the market closes, then there's some kind of news, maybe company-specific news, maybe industry news, maybe a news piece related to the overall broader economy. And then you have this gap up or gap down, as it's called, at the market open. So meaning the stock shoots up, 3%, 5%, 15% at the open. And obviously when the trading window is open 24 hours a day, you no longer have that. It will be a smoother price change over time. Although, to be fair, when whatever news is released, you might have a gap up or gap down anyway. So I'm not sure how convincing that argument really is. Oh yeah, in terms of global demand and demand for trading after the regular trading hours, these are a couple of charts taken from the New York Stock Exchange, who, as I said, also plan to extend their trading hours. And this shows that there is increasing demand to trade securities, well, after the regular trading hours. So I guess that's also something to take into account here. Finally, now let's move on why or who I think this may be a bad thing for. I think overall this may be a bad thing for retail investors, because if you want to invest intelligently, I think you should treat equities as ownership pieces in businesses and not as ticker symbols that are, well, popping up on screen, flashing red and green, and almost give you that casino vibe. I think the stock market nerd here put it quite nicely on Threads. He wrote, "The Nasdaq moving to 24/5 trading to address, quote, evolving needs of global investors is almost like a drug dealer saying they need to provide more drugs to address the evolving needs of their addicts." And in a way, it's quite nicely depicted by this AI image you can see in the background here. So I think I'm not sure if it will be good for the emotions of your typical retail investor. I think he or she might have less peace of mind. I think there is a benefit, or there's an advantage to having a very short trading window, because once it closes, you can start dealing with other things related to your life. You may start or stop thinking about the world of stocks, individual stocks, and so on and so forth. You may not be at risk of making a decision that you're going to regret later on because your emotions were overwhelming you. I think that's obviously just one group of retail investors and not every retail investors. Like for me personally, for example, it doesn't really make a difference. I don't know, maybe I might even welcome it because I will be able to access stocks more easily and more frequently. However, that doesn't mean that I'm going to check my portfolio all the time throughout the day. That's not what I do nowadays. I don't even have my brokerage account accessible on my phone, for example. So I only log into my brokerage account, I don't know, maybe once every 2 weeks, depending on the market environment. So I don't think it's going to make a big deal for me. For others, I don't know, maybe it will be to their detriment, because they, as I just said, may be tempted to make more investing decisions more frequently, to make more emotion-driven decisions, things like that. All right, and that's already it for today's video. I'll talk to you in one of my next videos. Take care.